Hello and welcome to Tech Circle. I'm Shweta Sharma and we are back with a fresh episode of Tech This Week, where we bring you up to speed with the most important weekly developments in the enterprise and emerging technology space in India. In today's episode, we discuss the upcoming union budget on Monday and the expectations from various sectors, ByteDance's road to a permanent shutdown, Microsoft and MakeMyTrip's earnings, FAU-G's launch, and OYO's new CTO and the top management reshuffle. Joining me from the Tech Circle newsroom are my colleagues Payal Ganguly, Supriya Roy, and Devangna Ghosh. All eyes and ears on the Union Budget 2021, which is going to be tabled in the Lok Sabha on Monday. A lot is expected from this budget in terms of economic recovery, which saw a major hit last year due to COVID-19 pandemic. We at Tech Circle have been speaking to various sector experts, investors, and startups to get a sense of what their expectations really are. And let's start with the startup sentiments. From what I hear, there have been talks about a more friendlier tax regime to benefit both startups and investors. Right, Payal?
That's right, Shweta. Apart from a friendlier tax regime, there is also a push for unlocking Indian rupee investments. Industry bodies representing venture capital funds as well as early stage angel investors and startups have written to the Union Finance Minister asking for parity on treatment of capital gains taxation as well on the shares of listed versus unlisted companies, which are treated differently under the current rules and regulations. Also, one of the asks is allowing government insurance funds, pension funds, as well as mutual funds to be able to invest in SEBI-approved alternate investment funds, which would mean that, there is more Indian rupee flowing into the venture capital funds.
Yeah, in the IT and the ITES side of businesses, companies have expressed their expectations from the government for a growth in the innovation expenditure and as well as associated policy clarifications on the whole special economic zone play now with the whole work from home environment sustaining from 2020. To offer us a detailed understanding of this all, we have with us Ashish Aggarwal, who is the Senior Director and Head of Policy Advocacy at Nasscom. Hi Ashish, thank you for joining us. We want to know what is Nasscom's expectations from the upcoming budget.
We have suggested measures which can be announced by the Finance Minister to really, allow for greater remote working or work from home. The second set of suggestions pertain to startups. And then we have a third bucket where we are really talking about, ease of doing business in terms of transfer pricing on account of disruptions caused by the COVID-19. And finally, we have some ideas in terms of, if the government has the appetite to think in terms of a bold policy with respect to the special economic zones. So as you know, special economic zones are specially demarcated areas, and work from home in special economic zones is permitted for remote working on a temporary basis. Now, this is something we have had a lot of support from the government, and during the pandemic, the way we were able to transition and sustain that for months has been really something very useful, and which has really allowed our industry to be resilient and to be very productive. Given that this entire experiment, so as to say, has given the industry also an opportunity to really assess that this is something which can actually be sustained beyond just the pandemic. And therefore, one of the things that we have suggested to the Finance Ministry is to really look at tweaks in terms of clarifications with respect to the SEZ tax holiday, to say that, even when the work is happening remotely, it would be still considered as the work from the SEZ units. So this is merely a kind of a clarification that we require in the Income Tax Act, which will really enable our industry to avoid any future litigation or uncertainty on this aspect. And just to add, we are already working closely with the Commerce Ministry to amend the SEZ rules, which will also enable the industry to plan remote working on a long-term basis in these SEZs. And that's something that we are hoping will get notified soon. Probably, it could be notified in the union budget itself as part of a, set of reforms with respect to remote working and work from home. The other related aspect is that it's on movement of goods in the SEZ. So when employees are working remotely, then the duty-free goods like laptops, etc., have to be taken out by the employees, and they'll probably stay out because the employees are working remotely. So this is again something we require clarifications both in terms of customs and GST to ensure that there are no challenges in terms of making remote working a reality for the industry. And the benefits are immense. It's not just that an employee, instead of coming to office, will be able to work remotely. It's also going to open up opportunities in terms of just remote hiring. So for example, a tech employee need not be based out of Bangalore or Pune or Mumbai or anywhere else. He could actually be working from his native place for months, and in fact some job roles could just be job roles where people have to work or are happy to work just from their hometowns or where they choose to. So in terms of engaging with talent and opening up opportunities for people who otherwise would find it difficult to come to certain cities. Lastly, on this, there is also a requirement for the finance minister to consider providing certain allowances and for work from home, because unlike the existing regime where there are certain allowances in terms of transport allowance, there is no work from home related allowance. So employee will naturally incur expenditure when he's working from home, whether it's air conditioning, electricity, or even any other expenses in terms of upkeep of his home office. So in that sense, a certain allowance is going to make it beneficial for the employee. And finally, there's also a requirement to clarify that if there are any expenditure which are going to be reimbursed to the employees on account of working from home, for example in terms of furniture, in terms of any other thing which is required to create that working environment at home from an official work perspective, such reimbursement should not be treated as perquisite in the hands of the employee, because from an employer perspective, the employer would be happy to provide and facilitate the employee to do this, but then if this were to be treated as perquisite, then the employees would end up paying tax. So and employers are not planning to treat them as capital assets or take back those things from the employees. Currently, a lot of the firms in the technology sector who have been enjoying the tax holiday under the SEZ scheme, they are actually sitting on the tax credit under the minimum alternate tax. Now, one of the conditions, the government had actually reduced the rate of tax last year for corporates to about 25%. Now, this is something that, for migrating from the old regime to new regime, there's also a catch that you can't carry forward your and adjust your MAT credit. Now, this is becoming a bit of a showstopper for our industry to really, take the benefit of this new regime of lower taxes. So what we are saying is that the finance minister should probably reconsider that condition and allow the MAT credit to be utilized as the industry moves to the new tax regime. And probably, we can have a period of, let's say, 3 years. It may not be open-ended, where the companies can actually utilize the MAT credit.
Thank you, Ashish. And we also hope that the budget expectations also translate into increased jobs in the market after last year's slump.
True, that's what the startup industry has been positioning itself as, the creator of 1 million jobs.
That's right, Dabangna. I was seeing on LinkedIn that multiple startups were listing out available vacancies every time there is a sizable layoff. Case in point being ByteDance recently.
ByteDance did let go of some people, didn't they?
Yeah, so the announcement came in this week and the numbers are significant, though the company did not disclose the exact details. It's been actually close to 7 months now since the government banned TikTok and Hello, both of which were owned by ByteDance in India. And given the lack of clarity on whether these apps will be able to stage a comeback, if at all, in India, the company said that it is laying off its staff.
The senior management actually started leaving the company as early as August of last year. I remember we spoke to several recruiters as well as rival companies back then, and ByteDance employees had already started looking out for job opportunities at these local alternatives. Same month, in fact, Rohan Mishra, who was the then India chief of Hello, resigned from his post only after about 4 months with the company.
Right. So now it is the turn of employees across operations, marketing, public policy, partnerships and alliances, content moderations, and etc. and other roles who are with TikTok's Mumbai, Bangalore, and Delhi offices. So interestingly, a statement which TikTok gave us said that it employs 2,000 people across India, though the India webpage says that there are about 1,000 employees. So not sure if they are counting the contract employees as well for this layoff.
All right, moving on. Let's talk about our colleague Shubham Sharma's frank review of homegrown PUBG. This week, after a much anticipated wait, FAU-G was launched, and from the looks of it, it is not exactly what Shubham seems to have had in his mind.
I have a question now. If I've never played PUBG in life before, will I be able to appreciate how bad FAU-G is, given his with his view in the backdrop?
Not sure about good or bad. If you haven't played PUBG, then you wouldn't miss much. But if you are talking about something which would replace PUBG, then no, it does not have a shooter mode. And the first version has only a single player campaign mode as of now. So you should go and check out Shubham's review of the app if you want to know a little bit more about it.
Yeah, and also looks like we will see more features from FAU-G stable in the coming times.
Right, Shweta. Actually, Vishal Gondal, who is an investor and strategic advisor to Encore Games, which has developed FAU-G, said that the game was looking to introduce player versus player mode soon and will eventually lead to esports as well.
So how is it currently monetizing the whole game?
There is an Easter egg in the game called iSpice, which offers deals and discounts on FAU-G related merchandise which users can buy. It also has some ads, but during his interview, Gondal told us that ads are not going to be the primary monetization model.
Moving on, Microsoft this week reported its December quarterly results, and the continued shift to work from home since early last year seems to have pulled through. It is no secret COVID-19 pandemic has majorly benefited these cloud players such as Microsoft, Amazon Web Services, and Google Cloud. Horizontal player Microsoft registered a 17% rise in revenues at $43.07 billion. And the growth was majorly led by the season's favorite child, cloud. Azure cloud computing services grew by 50%.
In fact, as CEO Satya Nadella rightly pointed out that 2020 displayed the dawn of a second wave of digital transformation, sweeping every company and every industry. Digitization is the new business block and currency, or whatever jargon you would want to fit in there.
Yeah, bottom line is that far less market share than AWS or not, cloud revenues at rivals Microsoft, Google, IBM, and Alibaba are only shooting up north. AWS in the October quarter commanded 32% of the market as per Canalys, and December numbers are not out yet.
Well, moving on from Microsoft, let's look at online travel booking. What a quarter it was for MakeMyTrip, which turned profitable in the third quarter thanks to the recovery in domestic travel. Also, there has been quite a few new features and membership programs which the company seems to be pushing this quarter. Debangna, can you tell us more?
That's right, Payal. So the company has been focusing on social media outreach campaigns, and they also relaunched their membership programs, including MakeMyTrip Black and Go Tribe for Go IBBO. They revamped their flight booking section to ease for faster checkouts. And they also launched a price lock feature, which led to improved customer retention and more bookings. But interestingly, since there hasn't been much outdoor events and advertising spent, the overall marketing and sales promotions expenses have decreased significantly this quarter by almost 82.7%. So the reported sales promotion expense stood at $7.8 million in this quarter, compared to $45 million in Q3 last year. On the financial front, the company reported adjusted operating profit of $5.2 million in Q3, up from an adjusted operating loss of $12.9 million in the previous quarter, that is Q2 FY21. The revenue for the reported quarter stood at $56.8 million. This is also a significant improvement from $21.2 million revenue in the quarter ended September 2020. And on a year-on-year basis, it plummeted 61.3% from $146.9 million last year.
This week, we also saw a C-suite rejig at SoftBank-backed Oyo Hotels. The hotel aggregator is currently recovering from the lack of business during the pandemic. And what are the prominent changes that one needs to know, Supriya?
The most prominent, I'd say, was Ankit Mathuria, who had been appointed as the global CTO, replacing Anil Goyal. Mathuria was previously employed as the CTO of Souk, which is the Amazon subsidiary in the Middle East and North African region.
And several other top executives have been elevated to grow its global presence in 2021. So the present Chief Business Development Officer, Ayush Mathur, will be taking up the role of Global Chief Supply Officer. Then their global COO, Abhinav Sinha, will now be the interim Chief Product Officer in addition to his existing role. Chief Growth Officer Kavikrut will jointly lead global communications and branding teams. On the international front, Oyo China CEO Gautam Swarup will be now leading Oyo International, which will also include hotels in the European Union and the United States. Swarup will be supported by Prasoon Chaudhary, who has been elevated as the president of Oyo International. Well, these are just a few of the changes that has happened, and there are probably more changes at various geographical levels for the C-suite management.
All right, with that, it's a wrap on this episode of Tech This Week. Stay tuned in for more interesting news and updates. See you next week. Thank you for listening.